Hey everyone, welcome back to another monthly real estate update here on Bald Prairie Real Estate. My name is Matt, that's Matilda, and we want to educate you all about real estate. We are going to be talking about this crazy real estate market we have in Canada, and that it might actually be slowing down. I know, crazy thought, to finally see the end to the madness that has been the Canadian housing market for the last year and a half, but I think we're finally there. We of course also have rising interest rates that is going to have a cooling effect on the market, combined with a number of government policies. The federal government has a few policies out, but more significantly, provincial governments have policies. Nova Scotia, I'm talking about you, that will slow down the Canadian housing market. Now I'm going to talk about those in the individual cities, not up front here. So if you want to just jump to the city you're interested in, right here in that play bar, all the cities are chaptered out so you can jump directly to them. If you are thinking about buying a house this year, I can recommend a fantastic agent for you. In the description of this video, you check it out below. There's gonna be a link to my calendar. You can book me in. I'm gonna give you a call, figure out what's most important to you, what you need in house, and then pair you up with the best agent in your market. But before we get started, let's give you another terrible joke. If money doesn't grow on trees, why do banks have branches? If you have a terrible joke that I can use in a future episode of Bald Prairie Real Estate, put it in the comments below. Like this video to help me out for the YouTube algorithm, and subscribe if you haven't already. There were 833 homes sold in Victoria last month. That is up 11% from the 5-year average of 750 homes sold in the month. There was just over 1,200 homes put up for sale in the month in Victoria, and that is down about 2% from their 5-year average, which typically is about 1,240 homes put up for sale in the month. With just over 1,000 homes for sale right now in Victoria, this is the fewest number of homes for sale at this time of year ever in Victoria. That's down 56% from that 5-year average, where normally there's closer to 2,000 homes for sale. That lack of active listings means the months of inventory in Victoria is 1.3. And the composite benchmark price in Victoria is now up to $950,000, and that is up 24% from last year. Before we get into Vancouver stats, let's talk about BC's cooling off period. Or at least that's how I wanted to start this section, but as of right now, the government hasn't released any details, so not much I can say about it. But trust me, when they do release this plan, I will have a video covering it. But in the meantime, let's get back to the Vancouver stats. The 4,300 homes sold in Vancouver last month, well, that's up 35% over the 5-year average, where normally about 3,200 sales happen in the month. We continue to see more homes being put up for sale in Vancouver, nearly 6,700 last month. That's up 25% from their 5-year average, where normally about 5,300 homes are put up for sale in a month. This is great to see. More supply is going to help balance out that market. The number of homes currently for sale in Vancouver is about 7,600. It is still down 25% from the 5-year average of about 10,000 homes for sale. But each and every single month, we've seen the active inventory increasing, especially relative to the 5-year average. But we are still in a very strong seller's market in Vancouver, with months of inventory being 1.1. Of course, if it's a seller's market, that means prices are increasing. The benchmark price in Vancouver increased to $1.36 million, and that is up 21% from last year. I've been hearing in the news about Vancouver how their real estate market is cooling off, and yes, it is, in comparison to the astronomical numbers that we saw last year. But make no mistake, this is still a very active and hot market in Vancouver. Talking with real estate agents there, they mentioned how they expected both the number of listings and the number of buyers to increase following the Easter weekend. It's very typical to see a slowdown this time of year, so they are expecting a bump in activity in the back half of this month. It wasn't that long ago we were talking about how bad the Calgary real estate market was, and now everybody wants to buy a house there. 3,300 sales last month. That is up 142% over the 5-year average, where generally only about 1,700 homes are sold in a month. Everybody who couldn't get their house sold a few years in Calgary seems to be jumping in on the party, because with 5,500 homes put up for sale last month, that's up 65% over the 5-year average. Normally it's about 3,300 houses put up for sale in the month. But with all that buyer demand, especially from Vancouver and Toronto, active listings down below 4,400. That's down 31% from the 5-year average. Normally about 6,400 homes are for sale in Calgary at this time of year. With all that strong demand from out of province, that means months of inventory is at 0.8. That is one of the lowest months of inventory across the entire country right now. This of course has prices skyrocketing. I had to resize my graph for this even to make sense. I mean, prices are basically hyperbolic right now in Calgary. $518,000 as that benchmark price. That's up 17% from last year. When I talk with real estate agents in Calgary, they continue to tell me how crazy the market is, seeing multiple offers on basically everything, especially in the single family market. But investors from Toronto and Vancouver coming in with piles of money are buying places left, right, and center. The Edmonton real estate market is a little bit behind Calgary, but things are starting to go crazy there. 2,200 homes sold last month. That is up 112% over the 5-year average, where only about 1,500 houses are sold in the month. And there's no shortage of people that want to put their houses up for sale. 4,200 homes were put up for sale last month. That's up 29% of that 5-year average, where about 3,300 homes are normally put up for sale. All that demand means the number of homes for sale, active listings, is down again. 5,200 homes for sale, that is down 34% over their 5-year average. Normally just shy of 8,000 homes are for sale in Edmonton. So that means that the months of inventory is 1.6 in Edmonton. And the composite benchmark price, $350,000, up 7% from last year. The Regina real estate market continues to be a very active one. 351 homes were sold last month. That's up 47% over the 5-year average. And only about 240 homes are sold in the month of March in Regina. But there's also a lot of people wanting to sell their house because there was 550 homes put up for sale last month, and that is up 3% from the 5-year average. About 540 homes are usually put up for sale. The number of homes for sale continues to lag behind the average, with 814 homes for sale to start the month. That's down 35% from the 5-year average, when only about 1,250 homes for sale at this time of year. That puts Regina's months of inventory back into seller's market territory at 2.3. The composite benchmark price has increased again, now $264,000, and that is up 2% from last year. While the Regina real estate market continues to be very strong, pricing houses appropriately still continues to be very important. Houses that are way overpriced are not going to sell, and we are seeing condo and townhouse markets improve, but again, those are at best balanced market territory. They're still not sellers markets for condos and townhouses. Saskatoon had another epic month. Okay, of course, I had to get another Epic Alliance comment in there. I'm gonna put in a link to this video, Conrad Neufeld's kind of rundown on what happened there. It's a really good watch, to check that out. With 491 homes sold in the month, that is up 49% over the 5-year average, where typically 330 homes would be sold in the month. And with 733 homes put up for sale in the month, that's basically equal to their 5-year average. But there's still under 1,000 homes for sale in Saskatoon. That's down 40% from the 5-year average. Typically, they're closing in on 1,700 active listings this time of year. So that means months of inventory is 2.0. That's a seller's market in Saskatoon. This strong demand, of course, means prices are up. The benchmark price is now $334,000 in Saskatoon, which is up 7% from last year. For the local insight on Saskatoon, I want to talk about their condo market. After many years of struggling with an oversupply situation, making it very much a buyer's market, things appear to be more normal in Saskatoon, but prices have not recovered yet to the highs we saw from the early 2012-2013 timeframe. I have to go to Winnipeg this September, and it's going to be the worst trip of my life. Okay, I'm kidding. I like Winnipeg. I like all my friends in Winnipeg. I got to get my jabs in. 1,436 homes were sold last month, and that's down 27% from last year. 1,848 homes were put up for sale last month. It's down 26% from last year. Just under 1,900 active listings right now. That's down 24% from last year, meaning months of inventory in Winnipeg is 1.3, and their benchmark price is $350,000. That is up 14%. Have you seen the headlines yet? The average house price in Toronto has declined. Is this the peak of the market? Then the Toronto Real Estate Board comes out and says their composite benchmark price has increased again. Who's not telling you the truth? Don't worry, I'm gonna get into that in 1 second. And the foreign buyer tax went up to 20% in Ontario. A little under 11,000 homes were sold last month in Toronto, and that is up 9% from their 5-year average, where typically 10,000 homes are sold in the month. And there were over 20,000 homes put on the market for sale. That is up 21% from the 5-year average, where about 16,500 homes would normally be put on the market at this time in Toronto. Active listings still remains down. There's about 10,000 homes for sale right now in Toronto, and that is down 16% from their 5-year average, where normally about 12,000 homes would be up for sale at this time of year. But months of inventory is now 0.9, and that is 4 months in a row that months of inventory has increased in Toronto. That composite benchmark price, so that's all property types combined into one number, is up 37% in Toronto, now about $1.376 million. So why is it that average price is down and benchmark price is up? The average price is a poor metric because it can be easily skewed by the types of property that sell. If no properties over $1 million were to be sold in Toronto in the month, that would bring down the average price. But if those same properties that were all priced under $1 million were selling for more money than they were the year before, the benchmark price would increase, And that's because benchmark price tracks price fluctuation. It doesn't just look at the average price. It was actually specifically designed to remove the volatility that is in average price. What does this all mean then? Well, both average price and benchmark price are both kind of correct and both kind of wrong. With the slowdown in single-family home sales in Toronto, you're seeing more condos being sold, which means average price is going to come down. But the reason we're seeing the benchmark price still continue to increase is there's still a lot of momentum in the market. We're still seeing prices increase because of all that pent-up demand, but that pace of price increase is slowing down. That's why the benchmark price has not gone up as much as it has in past months. When I'm talking with Toronto real estate agents, they're all telling me the same thing, and that is that they are sensing that slowdown in the market. But make no mistake, this is a slowdown from the astronomically crazy numbers that we saw a few months ago and last year. This is still going to end up likely being the second busiest year all time in Toronto real estate history. What's going on in the nation's capital? Well, they had over 2,000 homes sold last month, and that is up 15% from their 5-year average, when only about 1,750 homes are sold in the month. They also saw the number of new listings jump. Over 2,600 homes were put up for sale last month, and that is up 8% over the 5-year average, where typically about 2,400 homes would be put up for sale in the month. Active inventory, so homes for sale right now, continues to be a challenging part of the Ottawa real estate market. Under 1,250 active listings to start the month, and that is down 55% from their 5-year average. Normally 2,700 homes would be up for sale at this time of year. So that means the months of inventory in Ottawa is 0.6. And the composite benchmark price in Ottawa is about $760,000. That is up 13% from last year, or $100,000. Like in Toronto, Ottawa real estate agents are feeling a slowdown in their market. In fact, 56% of homes for sale right now are taking offers immediately, meaning there's no offer date. That's an indication that they're not expecting to get multiple offers. And that's what you see in a market slowdown. In Montreal, there were nearly 5,500 homes sold last month, and that is down 5% from their 5-year average, where typically about 5,700 homes will be sold in the month. With 7,200 homes put up for sale in the month, that is down about 1% from the 7,300 homes they typically see put up for sale in the month. The little over 10,000 homes for sale right now in Montreal, well, that is down 60% from the 5-year average. Normally there's closer to 21,000 homes for sale this time of year. And that means months of inventory in Montreal is 1.9, still a very strong seller's market. This of course means the benchmark price continues to increase, about $555,000, and that is up 17% from last year. Talking with agents in Montreal, they still mention that it's a very active market, but there's kind of an interesting divide. Anything that's priced under $1.5 million still continues to be a very strong seller's market. And then the luxury market, so for Montreal, that's over $3 million, there's a ton of overpriced listings just sitting around is what I've been told. So kind of interesting to see that split in the market. It appears that Nova Scotia has gotten sick of people from Toronto coming in and buying houses there, because now land transfer taxes are an additional 5% for non-Nova Scotia residents, and the property taxes will also increase. There were 550 homes sold in Halifax last month, and that is down 44% from last year. They had 705 new listings put up for sale. That's up 10% from last year. To start the month, they had 316 homes for sale. That is down 16% from last year. But just a week into the month when I'm recording this video, there's now 350 homes for sale in Halifax. So finally starting to see some more inventory there. Average price though, $490,000. And that is up 19% from last year. Really interesting piece of information for Halifax real estate agents. 10% of the homes, so 54 homes that sold in Halifax last month, sold $200,000 over asking, and 2% of the sales sold $300,000 over asking. Just absolutely crazy numbers coming out of Halifax right now. What does this mean to you if you are buying a house this year in Canada? Well, first off, that crazy price appreciation that we're seeing going up and up and up, it's starting to slow down a little bit. So we're not seeing those crazy year-over-year gains. There's more supply on the market than there was even a few months ago, meaning you as a buyer have more to choose from. And that tactic of underpricing listings, expecting them to sell way over asking price, well, as the market slows down, that will disappear pretty much overnight, because it only works in an incredibly hot market. As the market slows down, that will come to an end. But you also need to watch more Bald Prairie real estate videos. Right here is my first time homebuyers playlist. This right here is what the YouTube algorithm says you need to watch next on Bald Prairie Real Estate. As always, guys, thanks very much for watching.